It's time for the Security Token Show. We're here to bring you the latest and greatest in security token news.
Coming from across the globe to your living room.
And delivering all the latest STOs and getting you up to date on what's happening in the market.
So what are you waiting for? Let's get on with the show. Hello, and welcome to the Security Token Show. We're your hosts. I'm Herwig Konings. This is Kyle Sonlin, and we're here in sunny Miami, Florida. Excited to bring you all the latest and happening in tokenization news. Kyle, wow, what a week, man. This is going to be a crazy episode, I'll tell you that much. It's all going down. I'm sure you heard about the lawsuits coming in from Binance, Coinbase. We're going to be breaking down what actually might happen if the fallout actually begins. We're not just going to break down the high level like everybody else. But before we dive into everything going on in the top 5 and the rest of the news this week, I wanted to thank our sponsor, which this week is the Provenance blockchain. Now, we've talked about Provenance before because they are the blockchain that facilitates over $5 billion in home equity lines of credit on chain by a company Figure, the largest non-bank that issues home equity lines of credit, HELOCs, in the world, due to the fact that tokenization allows them much better unit economics than what is seen in traditional markets. But Provenance is much more than just a Figure platform. They offer all kinds of institutional asset servicing for blockchain technology. And pretty cool, they're part of our Success Network with Security Token Advisors. And we're hosting a panel breaking down everything going on there with Anthony Morrow from their team alongside Peter Gaffney. You know him and love him very much, as do we. And that is on June 20th. You got to check that out, coming up very soon. Thank you.
Actually, learn a lot more about Provenance with our latest Q1 report that just came out regarding the industry, everything that's happening, lots by Provenance. So thank you to our sponsors for making this show possible.
And with that, let's get into our top 5.
Let's do it. And starting off our top 5 this week, we got to go over to India. India's got 6 major banks that have come together and partnered with JP Morgan. This is, of course, their Onyx blockchain side that is now powering 24/7 transactions, instantly global. Kyle, what they said, it used to take hours, sometimes potentially overnight. That's a problem when now you can have blockchain that does it instantly. You got 6 huge banks all now working with JPM on this. The future of blockchain is here, folks.
Also includes weekends, that's 2 out of the 7 days that 24/7 can have operating markets. And into number 4, Israel. Also getting involved. This is a global industry, a global technology with the financial markets. And Israel is tokenizing bonds through their project Eden, which launched on May 31st. So it's now live in June. This is a few-month trial period to issue what they're calling dummy bonds, which are security tokens. They say that specifically, that are on a private blockchain where they're issuing those bonds on chain and then distributing out using central bank digital currencies in their native shekel, as well as many other different currencies that are interoperable between that. This is a smart contract intermediary. So they've actually built the technology, and then you've got the government issuer on one side, you've got the investor on the other side, everything facilitated through a blockchain. This allows for much cheaper and automated transactions and an audit trail of everything using the VMware Ethereum subnets on a private blockchain. Pretty cool.
Wow. That is an absolutely incredible development out of Israel. And moving on to number 3, we got to talk about Defactor, Kyle. They've tokenized, they're saying they're tokenizing $100 million worth of bonds. This will be lent out, usually against receivables from small to medium enterprises. But that's 100 million tokenized bonds coming on chain. They call them alpha bonds. And actually, they're using Polygon, the ERC 3643 standard, using Black Manta Capital as their broker, and Tokeny as the issuance platform for the whole ordeal out of Luxembourg. Gotta love it. Plenty more bonds that I imagine will follow that, Kyle.
Big players getting involved. It's all about having the right vendors that control different parts of the life cycle. It seems like they've really knocked it out of the park. And then to number 2, the SWIFT network. This is the global financial
underpinning software that everyone uses for money transfers around the world. All the banks use for their interoperability, built famously in the 80s, which is nice, but maybe a little bit out of date. They recognize it too. Now they're launching an expanded pilot of distributed ledger technology and blockchain tokenization. They've already been exploring this with central bank digital currencies to explore fiat to fiat transactions. But now they're diving even further, bringing in over a dozen institutions, working with public blockchains coordinated by Chainlink, and they're doing 3 different use cases. They're starting with Ethereum, and they're doing wallet-to-wallet transactions just to test how that process works, how they can do that at scale. Then step 2 is to go from a public blockchain like Ethereum to a permissioned blockchain, like we see with a lot of these kind of broker co-syndication networks that happen on Wall Street all the time, where you have a private network of individuals that are all participating together, but they don't really want everybody to have insight into what's going on. And then finally, the third step is actually cross-chain integrations. How can we take assets from an Ethereum permissioned blockchain and bring them to a different blockchain? They're working on all 3 of these trials right now with, as I said, over a dozen of the biggest banks. You'd recognize all the names. This is exciting stuff.
It's big moves out of Swift out of there for number 2, but it's not number 1, Kyle. Number 1, you should get familiar with the fact that Archax has announced that they've tokenized an interest in the Aberdeen Standard Liquidity Fund using the Hedera hash graph, which is actually apparently also Aberdeen's a council member of that. So makes sense, but a great use case because Hedera hasn't been on the scene that loud yet. This could be one of the biggest plays that they are now tokenizing here. I think it's a multi-billion-dollar fund, Kyle. Very big deal. Archax eating their own dog food. Aberdeen actually invested in their Series A. So all of this makes sense. Love to see that ecosystem coming together so quickly. I believe they even mentioned more products on the Aberdeen side could be followed on that tokenization front.
That is a $472 billion asset manager in Aberdeen getting involved in a very big way. And with that, let's get into Peter Gaffney and the rest of the institutional updates. Coming back to everyone with the institutional updates, I'm Peter Gaffney, head of research at Security Token Advisors, and we got a packed house this past week. So among numerous headlines and developments, the following are what really caught my attention. First, I want to give a round of applause to UK-based Archax for its recent work. So Archax actually raised $28.5 million in 2022 from names including the mammoth asset manager Aberdeen, put itself in motion. On June 7th, Archax actually begun the pilot program of trading tokenized FTSE 100 stocks, which includes the 100 largest companies on the London Stock Exchange, on the Polygon, Ethereum, and Algorand blockchains. And please note, this is not necessarily a tokenized ETF or index product, but rather Archax will be buying up an undisclosed amount of individual equity shares, issuing tokenized versions of said securities. So Archax will also be doing the same for government bonds known as gilts as well, and with the platform's FCA regulated trading and custody services, it's well positioned to act as that one-stop shop in London. Moreover, Archax is now doing something directly with Aberdeen, which is what I've been personally excited for and waiting to see since that funding announcement last summer. In this case, Archax is actually tokenizing its own equity investment, its own existing investment in Aberdeen's flagship money market fund, the Aberdeen Standard Liquidity Fund. So Aberdeen's not yet coming live with the tokenized product per se, but rather Archax is going to make that happen by proxy with its own held shares. So similar approach to the aforementioned tokenized stock play. And we also get another tokenized money market sliver to add alongside Franklin Templeton and Ondo Finance, which we love to see and love to cover. Looking at the infrastructure side of things in the market, which is where a number of our security token advisors conversations have been lately with some of the largest legacy providers in the capital markets, transfer agents, infrastructure providers, whatever. Swift is now extending its trials for multi-blockchain transactions through Chainlink's cross-chain interoperability protocol, the CCIP. So great to see Chainlink take some footing here in the tokenization space, and nice to see some of the recurring names involved as test partners. You got BNP Paribas, Citi, ANZ Bank, BNY Mellon, and Lloyds. And on the central securities depository side, we have Euroclear, SIX Digital Exchange, SDX, Clearstream, and even the DTCC itself. Swift has 11,000 member banks responsible for quadrillions of dollars in value flow, which is a ridiculous amount when looking at the potential for cost savings, considering a single digital bond proof of concept could save even 15 basis points. At scale, member banks are looking at tens of millions of dollars minimum in savings here. Incredible stuff. Can't ignore that.
Just to wrap things up on the international front, JP Morgan's Onyx division is back at it, working with 6 Indian banks to instantaneously settle tokenized deposits rather than trudging through the multi-day process of interbank fiat transfers. And the Tel Aviv Stock Exchange revealed that it actually selected Barclays, JP Morgan, Goldman, Deutsche Bank, Merrill Lynch, and BNP Paribas for its successful Project Eden digital bond pilot executed on May 31st of this year. That's all we got for the institutional updates today. Let's see what Sam Sachs is doing over in the market updates.
Hello and welcome to the Market Update. My name is Jason and we have an action-packed show today. After we saw Enegra Group's 55% collapse last week, it has quickly bounced back up, and so has the total security token market cap, now trading at $16.6 billion. Brox Equity, a private company registered in Alberta, Canada, is combining traditional energy and the emerging crypto experience as a way to contribute to Canada's economic recovery for the energy industry. The company is raising up to $20 million through an innovative exempt digital security offering, which will provide investors with diversified exposure to Bitcoin, natural gas, and electricity. The offering is part of the Brox strategy of purchasing natural gas assets to generate low-cost, environmentally efficient electricity for its proprietary Bitcoin mining farms. Brox uses 50% of the power capacity that is generated at its sites to mine Bitcoin on its own account and offers the remaining 50% to independent or third-party Bitcoin mining companies. Brox has a strategic relationship with Permian Chain Technologies, the developer of a proprietary blockchain platform that brings together energy companies with crypto asset miners to transform the way energy is funded, produced, bought, and sold. The Brox digital security, known as the Brox token, is expected to be hosted on the Permian Chain platform. And it has been anything but a calm past 7 days for Binance and Coinbase, as the S.E.C. has cracked down on both, suing each exchange for allegedly breaching its rules. The S.E.C. last Tuesday alleged Coinbase traded at least 13 crypto assets that are securities and which should have been registered, while last Monday it also accused Binance, the world's largest cryptocurrency exchange, of offering 12 cryptocurrency coins without registering them as securities. The heads at both companies have fired back, alleging that the S.E.C. is out of line, and this battle is sure to have many more fireworks down the road. That's all for now, but have a great week, and we will be back next Monday with more news.
And thank you, Peter, and this time Jason, for filling in for Sam on that incredible update there. But Kyle, it's time to get into our main topic for the show. Huge news. This could be some of the biggest activity out of the S.E.C. that we've seen all year long. They have officially come out and gone after both Binance US and Coinbase once again, Kyle, but they're not the same cases. We're going to break down exactly the repercussions of what's going on between the two here. Starting off with Kyle, let's look at Coinbase. What's going on here? Set the stage.
Right. So the S.E.C. came out with some firecrackers this week, really trying to prosecute and move forward with what everyone in the street is calling it Operation Choke Point 2.0. 1.0 is going against a lot of the banks that were facilitating crypto transactions and business practices. Now it seems like they're moving against a lot of the crypto companies that are really active in the industry. And they came out against Binance and then Coinbase in consecutive days, really trying to shut them down with big lawsuits. And so there are some really big differences here. We want to start with Coinbase because it's actually a little bit more tame. With Coinbase, really, the S.E.C. is just moving forward with their idea that all or most of the cryptocurrencies that are trading and transacting in the market right now are unregistered securities. They believe that these are essentially derivative products or synthetic derivatives that companies are using to fundraise for their operations, that investors probably believe that they're getting some exposure into the underlying company. And there's an issue there with documentation, with how they're fundraising. And as Gensler would call it, these are kind of schemes or fraudulent manipulation of the existing markets. So Gensler and team came out against Coinbase, saying you are operating an unregistered broker, an unregistered exchange, and an unregistered clearinghouse, essentially saying you're doing everything that an exchange would do with none of the licenses. I don't care that you don't think that these are securities. We believe they are. And since we believe they are, you're doing these practices. That's kind of the gist of the Coinbase thing. You want to shed a little color there?
Yeah, I mean, I think that was a great setup here. The result is now that they are asking a cease and desist by Coinbase on their staking activities that they consider, again, unlicensed, not proper, as well as you pointed out there that they actually named a list of what coins specifically, not limited to this list, of course, naturally, want to give themselves coverage, but they identified several tokens, cryptocurrencies that are trading through Coinbase that they consider securities that they have not themselves actually gone after yet from a securities violation perspective. So very, very interesting.
One of them, including Polygon, which we talked about in our top 5, is a blockchain that a bunch of banks are using to actually issue tokenization on top of.
Kind of a big deal. It's all interconnected in this way. And as a result, let's talk about naturally, I
what
think
might happen, right?
Yeah, we're going to expect Coinbase to fight. They've made that very clear. But the reality is we're going to talk about what happens if the SEC gets its way, more or less, right? For example, now they are going to have to actually activate that ATS that they have under their belt. It's called, I believe, Keystone. They might have reconverted it to
Coinbase ATS.
Exactly. But the problem is none of that process actually got them permission from FINRA to start trading what we would call digital asset securities in their reference for the SEC, which is the license that you actually need in order to go ahead and trade these.
They'd have to apply for that process and open that for those securities.
One would hope that the SEC might, settle and maybe fast track or,
we did see Prometheum get approved for this very thing.
FINRA, yep. So there's potential ways that there could be some grandfathering or there could be some potential where we could at least see them get that license pretty quickly, which would be great.
What else?
We got the fact that now, of course, their staking services actually would be requiring a prospectus. They're offered to retail investors. So you actually need to, of course, register these products. That means all kinds of disclosures. The issuers themselves being involved may be kind of tricky when it comes to dealing with some of these foundations and structures and the way that some of these, coins are essentially set up. A lot more to that too, right, Kyle? The fact that now they have to operate a broker-dealer, all new kinds of procedures, all new kinds of protocols, compliance may or may not affect the user flows. There's definitely a lot of business activity that they're going to either give up or have to partner with new people or set up because they're just not allowed to do certain things all under one roof. The way that they're
to get money in and out of the platform.
How does that change up that user experience or the underlying operations? That's tough to say. But it is very, very interesting that it could be a ultimate result that Coinbase has to face. That it's like, well, if we want to keep doing business in the United States and we don't get our way in the courts, perhaps this is it.
It basically results in just a lot of fines. And obviously, to your point, a huge change in business practice, which could be a huge liability for the company in the sense that they may lose a lot of their customers. They may lose a lot of their clients because of the fact that these clients may not be interested in working with a service that now has to fit in a very rigid structure. That being said, it also could offer benefits in the sense that there may be institutions that have not been interested in getting involved in this industry because of the regulatory issues that if they can, despite how difficult it might be, get into the goodwill and blessing of the SEC, perhaps that presents a different opportunity to work with traditional Wall Street companies like the ones that we cover here every week on the show that are doing issuances of securities on chain. Perhaps Coinbase could be one of those underlying brokers or tech platforms that provide.
I want to come to their aid a little bit here and stand for them to say, like, they are, they have openly said that they are trying to work with the SEC. Very much so, they're literally trying to go to the court to say the SEC is not trying to work with us as Coinbase.
Yeah, they sued first, actually.
Yeah, they actually did, right? So this is actually potentially, a little bit on the fault of the SEC as well. So unlike with the Binance case, Brian Armstrong, the CEO, he is not named in this.
There's no fraud.
There's no fraud, right? We're just seeing let's call it difference in philosophy.
Sure.
That due to a lack of clarity or potentially not from the SEC's perspective in the courts and around this stuff, they're just trying to figure out how can they do this the right way. But there is no fraud, like you said. The Coinbase is a publicly registered company that the SEC had to approve in order to allow that. So we're seeing, just a good company trying to do things the right way, falling in potentially a bad way to try to deal with the current structure that the legal environment and the way everything is set up with the S.E.C.
It's a real clash of the Titans.
Yeah, exactly. It's a good story. It's one we support what's going on.
Not always the case for their other end.
Binance, this feels FTX-y to me. What do you think?
There's a lot of similarities with at least what the S.E.C. is accusing Binance of as what we saw with the FTX scandal. The biggest problem, I think, and the biggest difference here is that a lot of the fraudulent misconduct that the S.E.C. is claiming that Binance did is actually not as much about Binance, the company specifically, as much as it is subsidiaries and outside actors that were supposed to be firewalled that were not, which results in commingling of funds and a lot of these kind of more fraudulent business practices. This is not what we see with Coinbase. Coinbase doesn't have trading firms that are actively manipulating these assets. They're not funneling assets outside of the exchange into other firms. They don't have offshore companies that are providing services that they know are not allowed in the US. They've been a primarily US company from day one, and that actually, I think, plays to their benefit here. With Binance, there's a lot of issues around a company called BAM Trading, and I think a lot of shell companies there. So we don't have a ton of insight in the same way that that FTX had hundreds of entities. And basically, the claim is that Binance is taking a lot of the cash and essentially wash trading it through using outside companies, blending a lot of the funds within the underlying holdings. And then, of course, they had this weird separation between Binance US and Binance International. And of course, as it's not incredibly shocking, they weren't actually firewalled appropriately.
Yeah, no, I think that's a great way to put it. Of course, all allegedly, we're going to see this play out, but the reality is it seems very much so like there is, bad acting at play here, which is why in this case, CZ, founder and the CEO of Binance, not Binance US, this is technically there's a firewall, but as they have gone to demonstrate very clearly in their argument, the S.E.C. doesn't really see that firewall.
They've got receipts. There's a lot of...
Yeah, CZ is ultimately the one calling the shots at the end of the day. And so therefore, he's being named personally. Lots of liability, possible jail time. Who knows? Again, just like we're seeing play out with SBF from FTX, this very much so could come to a similar situation. We're not seeing cease and desist. We're seeing a request to freeze assets of Binance US, right? Very different situation that's going on from Coinbase.
So let's talk about what happens here. Well, when assets get frozen, especially when you're a custodian, when you're a pseudo bank, I know they would hate for me to say that, but a lot of these crypto companies, as we've talked about here on the show, do act a lot like what banks do. Whether or not they actually are or not is up for debate, but they certainly act similarly. When assets get frozen, they're less liquid, which often causes hysteria, causes people to be scared about the solvency of these platforms for good reason, probably. And not to mention, a lot of these firms are fractionalized in terms of their banking. So they don't have 100% of their assets on the platform at any given time. So if a big chunk of the assets that they do have access to get frozen, it can very quickly cause insolvency in the event that a lot of customers want to pull their cash out. We haven't yet seen that in Binance, which is actually pretty impressive because FTX collapsed almost immediately. Versus Binance has held okay, but we'll see how long this process takes. We know that court cases can take quite some time, and so there's a lot of different pieces here. So that's, I think, the first step is that the frozen assets is a very different scenario than what we're seeing with Coinbase.
No, I think that's spot on, and I don't really want to go too down in the rabbit hole. I'm sure a lot of our viewers are already kind of getting the situation. We're trying to add a little different color here, but I think it's worth mentioning is the fact that unlike with Coinbase, again, publicly registered stock that people can participate in, and they were trying to do some staking activities, very different from their Binance token that we see, the BNB token, where some of this wash trading, some of this activity was actually subject to and part of the play. Very different because, again, Binance token, not a registered security or acknowledged as such, and possibly several violations there in itself. Which compounds the problems that are, actually present here in this Binance case with the S.E.C, specifically Binance US. Mm-hmm. So I think it's worth mentioning that we probably won't see CZ in the U.S. anymore, given that he pretty much would probably be arrested immediately. But definitely, again, these are two very different stories. I think that's kind of what I want to leave, at least from my perspective.
Yeah.
What else you want to add?
The final piece here is that while the Binance case looks a lot like the FTX case with respect to the current facts that are put out there in the market, I do want to note there is one huge difference, and that's that Binance does a ton of volume and has a ton of international users. From the FTX side, it always kind of seemed like there wasn't a ton of real activity going on in the platform, and that's why everything drained out immediately. Whereas I do think it's interesting that Binance has represented a huge chunk of cryptocurrency trading globally for a long time. This is one of the longest actors. They have a ton of resources behind them. They have made a ton of money in the process. And I'm sure there are a huge amount of large actors that are supporting them and maintaining this process. So a lot of this may look suspicious. I think it is a little bit different with respect to they do have an actual operating business here, as opposed to in some of the other cases where it was more vaporware. So that could provide a different layer of scrutiny and certainly a different layer to this whole equation because there's a lot more resources and actual activity behind it.
And look, in that event, we can expect something very similar as we just described with Coinbase, where Binance US will have to get the right licenses, put in the right protocols, disclosures. They actually, in that case, got a somewhat overlapping but separate list of securities that they were trading, supposedly, right? So this would be a very similar story that could end up playing out because to Kyle's point, we're talking about arguably, I think, the largest cryptocurrency exchange in the world. So this is definitely why we're saying that this is a big week that we saw last week with the S.E.C. But two very different cases, Kyle.
Just as the Ripple case continues to loom over the industry and dozens of other lawsuits that are set to poise the future of blockchain, cryptocurrencies, and everything tokenization. And we're going to keep you here updated first.
We can keep going on and on, but we got to end our show with the companies of the week right now. So hopefully you enjoyed. Hopefully you learned some new stuff, got some new insight about what's going on here. Of course, we want your questions, your feedback, your thoughts, maybe a suggestion on what main topic you want us to cover next. But in the meantime, Kyle, I want to hear about company of the week.
Let's do it. And diving into our final segment of the show, episode 192, we're talking about our companies of the week. This is two businesses Herwig and I wanted to specifically shout out for doing some cool things in the industry and really give a highlight to innovation happening globally. So Herwig, how about you kick us off? Who's your company of the week this week?
I got to nominate the fifth biggest bank in the world. Wow. MUFG, you're my company of the week. I'm watching you. You're making huge moves over there in Japan. Progmat, your blockchain solution, your tokenization solution is getting real adoption by many, many players. And now you've announced something that just really gets me going. We saw about it earlier in the top 5. Also, it's Swift exploring interoperability. And now MUFG has announced Progmat's issuance platform will support natively bank-backed stablecoins on multiple public blockchains. They say Ethereum, Avalanche, Cosmos, and Polygon, probably more in the future, that will now be supported for stable coins. And these are not just for MUFG to issue. It is for other trust banks to also be able to use this technology and create stable coins, which I think we've talked about it before on the show plenty of times, Kyle, but as we know, it is the foundation for security token markets. You need digital dollars in order to settle, clear, 24/7, et cetera. So I believe MUFG is very strategically here building the technology for Japan's security token markets to really take hold and flow. And so for that reason, Kyle, MUFG, Progmat Solution, you're my company of the week.
It makes total sense. I think we've done main topics on multi-chain assets or cross-chain assets for years now. This obviously is where we're going to go, but it's hard to build those cross-chain communication layers. Fascinated to see Swift and MUFG tackling these same problems, which is great to see for the development of these markets.
What about you?
My winner this week is Defactor Labs. This is the company based out of Luxembourg, or at least their issuances are based out of the Luxembourg jurisdiction. They are now doing a $100 million debt tokenization, looking at working with small to medium enterprises and taking a lot of their accounts receivable, illiquid assets, and creating debt behind it. This is something that we see, small to medium enterprise lending. Now it can be tokenized, fractionalized, and distributed around the world. I think this is really cool. They're working with Polygon, and they've already done a $30 million test pilot of this issuance and net out $2 million that then they reinvested back into the ecosystem and the infrastructure that they're building. Now they're scaling that to over 100 million, and they're working with some trusted players. Black Manta Capital Partners as their broker, somebody that we've had a good relationships with for quite some time, as well as Tokeny, one of the friends of the show as well, is doing a lot of the issuance through one of their ERC standards. Remember, Polygon is an Ethereum virtual machine, meaning that they can use all the Ethereum smart contract technology just on a different blockchain for improved scalability, speed, reduced costs, things like that. And so I think this is really cool. They're doing some awesome stuff. Wanted to shout out Defactor Labs for bringing tokenization to market.
I think that's an absolutely great choice. Like you said, great set of partners, great mission, great traction already. And shout out to Tokeny, Success Network, a partner member, fantastic. So yeah, I'd love to see more of that. It's a great choice with Defactor. I'm expecting them to do a lot more too.
And with that, that's our show. Security Token Show, episode 192. We're 2 episodes away from our 4-year anniversary, people, and then only 8 away from episode number 200. So please like, subscribe, share. As we know you do, we've crossed over 50,000 listens across our podcast episodes and tens of thousands more across YouTube. So thank you for everyone tuning in each week, and we'll talk to you next time.
Happy tokenizing.